All right, doing a quick market analysis on video. I don't feel like typing. So check this out. Looking at the market, just gonna look at Bitcoin, maybe Ethereum, but looking at Bitcoin here on the daily, or actually that's the 4 hour. Let's look at the weekly. Let's start from the weekly. Literally just consolidating, you know? Buyers buying this up. I mean, it doesn't mean we can't go lower, right? But now I would use this 49K level, our last pivot where we saw buyers. I would use that as kind of like a level of support and maybe a level of risk if you're gonna add additional risk here, right? Anywhere around here, you could base the additional adds to your position based off this pivot. If we break below this, then you could get out of them, take the loss, right? So manage your risk there on ads. You know, if you've been riding this since last year like I have, you know, you're way in profit. But, you know, I'm kind of thinking of adding to my Bitcoin position, but I would like a test and hold at least above 54K, right? Kind of create this kind of like inverted head and shoulder type of pattern, you know, and just see how the market acts. MACD is still trending down. Not ideal for a bullish case or continued bullish trends until that gets back above and starts trending bullish, starts trending up. I don't see us really making any significant moves. I mean, yes, we might get like a one-day pop or move up, but until then, I'm not really seeing it. Not only that, but we've been making lower highs here, right? Until we get above 70K, that would be a first sign of showing us that, okay, this is starting to look constructive, starting to look bullish, and maybe look at it, start taking some longs up here if you can't catch anything down here, right? All depends. But yeah, it's kind of like a weekly look and bigger time frame, and there's nothing really to do other than just collect your yield if you're yield farming and just let that work for you. You know, compound, or not compound them, but take that yield and do what you want with it. Either stable up or buy the dips. You know, you could do any of that. That's a great thing. You don't have to add additional capital. You could just use the yields to sort of buy the dip, you know, increase the size of your positions. So looking at that, daily, same thing, looks, you know, kind of, MACD's kind of choppy, iffy, right? Like it's not bearish and it's not bullish, right? It's just kind of been consolidating here. And I think we need to yield to the higher time frame now. You know, as time has went on in this market since the top in March, we've been sideways and consolidating. So all this is just noise to me. It's just noise and chop and not really worth focusing on right now until we get a trend in the market. So as that went on, you know, as time went on, daily kind of, you know, showed a bearish divergence. And that's when I really started getting heavy in my yield farming on my concentrated liquidity pools, and just been farming yield since late March. That's what I've been doing, right? And then, but yeah, just seeing here, you know, all noise here. What I'm looking for is high volume, price action, breaking levels of support, breaking levels of resistance, and trying to keep my liquidity pools in range during those times, because these high volume, highly volatile, huge price action where the bulls and the bears are battling, that's where I want to be involved and just providing my liquidity, because that influx and that increase of volume generates more yields for me. Like this day on August 5th, this is when the Japanese carry trade was dumping. I was yield farming this in a super wide range. I think I was like my Ethereum Ethereum USDC liquidity pool, the upper range was about 40K. And that's super wide, but I was still seeing about 300% APRs. So you can't afford to miss these moves. These are like the best times, man. I love it when this, I mean, yeah, your value of your portfolio is going down and whatnot, but if you have the long game in mind, it doesn't matter, right? As long as you manage your risks through position sizing, making sure you're not levered up, and you could just sail through these choppy waters, generate that yield. So yeah, that's the daily. Nothing really to look. Not even 4 hour. If I don't see anything on the daily, no reason to go to 4 hour and look for entries. Right? There's nothing there. Keep it simple. You don't have to spend all day in front of the charts. You see this, I'm like, MACD is, trending down. Price below 10 SMA. Well, I mean, nothing really like screaming bullish. But if you look here, kind of like zooming in, you can see there's buyers down here, right? We could see if this level holds. Maybe even take a trade versus this 57K level. It's a good idea. If you're looking for a short-term trade and scalp, then you get that, and maybe you could get, 5% out of it or something, right? That's the thing, man. It's like there's no big reward trades here, man. It's like it's too choppy, too choppy for the time you got to put in to generate any significant returns, right? So I prefer to just take time away from the screens and rest and wait. I monitor the markets every day, but I don't do much every day. That's the key, man. Not wasting too much mental capital and energy in the markets when it's not ready for you to. All right, well, that is my analysis. Have a good day. Stay safe.